Okay, so this is actually the second session for the trade doctor lah. So the first session it was done quite a while back, because it's not really easy to do this session. It does take a lot of time to go through each and one of the trade data that was submitted lah. So in summary, right, what this series is about is that subscriber will submit their trade data, which is 10 closed trade. So I will look at the 10 closed trade to see what are the kind of issues they have, and I will give my advice. I will give some judgment on what this person is doing. So they will submit through this Google form. Is 100% anonymous. Even I myself, I do not know who is sending all this lah. So even if it is my good friends sending in, right, I wouldn't really know if this data belong to them also. But I did state that state just state your nickname, just put any name here, so that when I do choose your data, right, at least you will know lah, you will know that this particular data belongs to you lah. So it is good to see how other traders are trading, especially those in Nimbus Capital Patreon, right? It's quite I would say educational to look at how other subscribers are trading, because even though I put out the TP level, the stop loss level, right, it doesn't really mean that everyone is doing the same thing. Everyone is following exactly like how many lot size, what are the risks that people are taking. So it is from this session that we can kind of get some insight lah, and you can use it as a way to compare to yourself also. So for today, the trade data that we are going through come from Neil Thompson, of course, not the Neil Thompson, but whoever this person is. I'm not really sure if you are in this live session right now, but I'll be going through this trade data. Okay, so I actually plot this out here, or the trade data that he has submitted. So this is exactly the data that he gave me. I just copy and paste it here. So you can see that his capital is $100,000. That's what he put lah. Whether is it really $100,000 or not, I'm not sure. I'm not sure. But of course, I will assume that what you tell me is accurate, because if it is not accurate, right, then some of the analysis that I'm doing on your trade data will no longer be correct. Okay, so what I'm going to do is I'm going to give you guys like maybe about 5 minutes like that. Just look at this. I think 5 minutes too long, maybe about 3 minutes like that. Just look at his data here and kind of like digest a bit, see what's going on. What I noticed is that some of the dates are not correct. When I try to plot the entry and the exit date, right, some of the date, it doesn't coincide with the price lah. For example, APEC Reality, it was entered at 5th June 0.73, exited at 21st June 0.82, but actually on 21st of June, right, price is nowhere near 0.82 lah. But I just take it as a typo error on the date. I'm going to assume that the price are entered correctly. It is just some error on the date itself lah. Okay, so I'll give you guys about 3 minutes. Take a look at this, digest a bit, and then after that, I will start my judgment to see what is going on with this person or this trade data. At the meantime, right, I'm gonna take the 3 minutes to go and make some Milo. Okay, so I'm back. I hope you guys have a good look at this. Before I begin, right, just want to point out that obviously 10 data is not sufficient number of traits to judge a person. But of course, I definitely do not have the time to go through like hundreds of a trader's profile to go and see whether if he's doing something correctly or wrongly lah. But within this 10 trait, there are certain things that you can pick out, and from there you can kind of extrapolate that particular thing to majority of his other trait also lah. Okay, so let's see what we have here. So for the sharp eyes, right, you can see that I kind of hide a few columns here because these are the columns that I actually made some calculations. So I'm gonna unhide them, right? Okay, so contract size, very simple. It is his entry price multiplied by the volume. So that is his contract size. But this contract size, it has already been converted to Singapore dollar. So you can see that there are US counter, there's a Hong Kong counter, there is Singapore counter. So we have a good mixture here lah. And but of course, in order to compare between all the 10 counters, right, we need to have a single currency. So I have converted everything to Singapore dollar. Next is contract size. So contract size is how big is the contract size with regards to his total capital. So we have 10.5%, 11.3%. Then the third column is profit loss. Of course, what is his outcome for his particular trade lah. So it is basically the exit price minus the entry price multiplied by the volume. Then you get the profit loss. The next is profit loss percentage. It is as a percentage of his portfolio. So meaning if he got $619 profit, right? How much of this profit is it in percentage with compared to $100,000? So we have 0.6, 1.0, 1.9, then we have 2.4, 2.1, 1.2. So it helps us to see how much is he losing or getting with regards to his total capital. Next, this column, price movement. Okay, price movement is referring to how far have the price moved when he exited. For example, let's say task US, right? He entered 65.5, he exited at 69.38, meaning task US actually moved 5.9% from 65.5 to 59.38. So this number actually give us some clue about whether this trader is able to hold or not. And from there, right, we are going to be able to see a few certain bad habits that are coming into play lah. Okay, so now we have a little bit more insight already, a little bit more insight to the 10 trades. I'm going to put this analysis out to you guys. Before I start, right, I want you guys, whoever present here, if you are the owner, you can also answer. Name one weakness and one strength that you see from these data. One weakness and one strength. If you cannot find weakness, then you say no weakness, or if you cannot find strength, you just say no strength. But just type out one weakness and one strength, what you can pick up from this data. Run too fast. Run. Okay. Come on. Everyone try. Because it is a good practice. Next time, right, you can take your own trade data. You can do this by yourself. Risk more than 2%. Okay. You must say whether is it weakness or strength. So is risk more than how about Ash? Adhere to SL is strength. Run too fast is weakness. Okay, okay. How about the rest? Need more answers. Okay lah, give you use Patreon scanner strength. Okay. That one I don't know lah. That one very subjective lah. If there are other people who keep picking up all the wrong trades, wrong counter, then maybe that that might not be a strength to them. Of course, that there are very, I would say, a few obvious traits that were definitely Patreon trades, Patreon scanner. But whether or not this trader able to execute the trade properly is another question. Okay, so one thing that definitely stands out. One thing that definitely stands out is if you look at the loss, if you look at the profit loss column, right? The loss are all 2000, 2000, very close to 2000. Whereas the profit are like 600, 900. Then we have 1009 here. But you can say that this 1009 is actually an outlier because most of the profit average close to about 700, 800 like that. Only this one trade, Ferro Globe, right? It suddenly shoots up to 2009. And in fact, there is a very good reason why Mr. Neil Thompson was able to get such a high profit on this trade. In fact, if you look at the price movement, right? If you look at all his profit trade, this is the only trade that he is able to get close to 20% price movement, meaning price move from 7.54 to 9. That is very close to 20%. But for the rest of the trades, right, they are like 6%, 9%, 10%, 6%, 10%. So the average is about maybe 8-9% like that. But his losses are very constant at 2%. So I would not say that his loss is more than 2% is a bad thing. In fact, it's only a tiny bit more, 2.4%. So if we kind of take this as a whole number, right, we round it down, we round up or round down, he is still adhering to the 2% rule. So that is, I would say, a strength. But aside from that, right, we have to see why are all these things happening. Okay, so before I start to explain, let me show you this report that I made. So at the end of the day, right, I will be sending out this report. So all of you can kind of like take a look at it. So all these data, right, is we calculate from here. So first we have the raw data. The raw data is what I got from this trader. Then we have the tier 1 data. Tier 1 data are calculation that we get from the raw data. So that's the tier 1 data, and which is what you see here. See this portion. So from here we can calculate further numbers, which I will consider tier 2 data. So here you can see he has 7 winning trades with 3 losing trades. So his winning rate is actually 70%. But if we look at the risk reward, right, it is very low, towards around 0.46 like that, meaning for every $1 he risk, right, he is only winning 0.46. He's only winning 46 cents. That's not even like half. I mean, like if you risk $1, you don't even get back 50 cents. But the thing is, because the winning rate is so high, right, it kind of helped pull up his expectancy to positive, but this positive is very I would say not very positive also, because it's 0.02 is, if you round right, is if you round down is practically at 0 so you can see that if we use his expectancy value as a scoring, right, he's somewhere in the middle smack down at the 0 level. 0 mean he's neither making profits or he is not making any losses. So is neutral. So to be neutral as a trader, right, it's a very good thing. It's a very good thing. In fact, if you are neutral, right, you are better than 90% of the entire retail trader population. So in fact, I would say that being neutral is actually considered very, very good already. Although in reality, right, if I calculate everything, he actually made an overall profit of $400. But the thing is that since his account is at 100K, right, $400 is so insignificant that I'm not really going to consider that. But of course, if his account is like 10K or maybe 20K, then $400 will hold a much more significant value. So if you look at his expectancy, right? I mean, if you compare this to our Nimbus Capital profile, right? We also have 70% winning rate, but our expectancy is like at 0.50 like that. So let me show you. Our expectancy is 0.50 like that, mainly because our risk reward ratio is about 1.13, because for every $1 we risk, we are getting about $1.13 as reward, which is a lot higher than a risk reward ratio. Although previously I always mentioned that we should not look at risk reward ratio by itself, right? In this case, because the winning rate is identical, the performance of the two portfolio will be, of course, dependent on the risk reward ratio, since both winning rate is around 70%. Okay. So you can kind of look at the scoring. What does the scoring mean? If you have anything above than 0.5 in terms of expectancy scoring, right? You are considered a very good trader. But even if you have somewhere around 0.2, 0.3, you are considered a very good trader really. So we will look at in much more detail of how this trader is getting a expectancy so low. Okay, so firstly, let's take a look at risk profile first. Risk profile meaning we are looking at all the trade that he lost, meaning we have 3 trades here. So we can see that his average loss is about 2.15%. So it is just an average of this 3 number. The average price movement of loss is about 19.3%, meaning on trades that he take a loss, right, the stock moved down by an average of 19%. So in this case, MC Payment moved down by 19%, Fire Rock moved down by 20%, Yoma moved down by 18.75%. So what you can see here is very consistent. It's extremely consistent. And if you look at the RSD of the average loss, right? RSD stands for relative standard deviation, meaning it is to see how much these numbers are differing from one another. So you can kind of think of it as a standard deviation, but it is in a percentage format. So 10% mean that these 3 numbers, right, they are actually about 10% away from each other. So the higher the number, the more volatile it is. You can kind of, if you want to use the term volatile, the lower the number, the much more consistent this person is. So 10% is actually a very low number. If you compare to his profit profile, the RSD of his average win rate is actually 70%. But in this case, for his risk profile, right, the risk scoring is A, because this trader is extremely consistent in loss taking. Extremely consistent in taking his loss. And not only that, right, he is also very disciplined as keeping his risk to 2%. So this is the strength. And in fact, this is a very important strength, because he is able to get his shit straight in his risk department, right? In fact, if he want to improve, he can improve very easily, compared to, let's say, those who are getting a lot of profit, but the risk also all over the place, right? Those are the ones that are a bit hard to improve. But as long as your risk profile is up there, right? You show certain signs of discipline, you show a sign of trading, you show this evidence that you are able to take the loss and run without thinking too much, then you are a good trader. You can actually, there's a lot of room for you to improve. So that's why the risk scoring there is. So in terms of risk scoring, right, we are looking at the number, this number, whether 2% or 3%. I mean, if it is much lower than 2%, right, it's also not good. too low is not good, too high is not good also, but if you are able to keep to 2% is all right. And secondly, we are also looking at the relative standard deviation, meaning we don't want this number to be too high. If this number is too high, right, then you are not taking your loss consistently, you are like all over the place like that. So in both departments, this trader is very, very strong. So that's a A there. Now, the profit department is the issue here. So just by looking at his profit profile alone, right, you can see that his average win is 0.99%, meaning most of his win are about, he only get close to 1% of his capital as a profit. But even then, right, even then he has a ISD of 70%, meaning his profit is like not consistent at 0.99%. Also, it is like sometimes 0.62%, then sometimes 0.71%, then sometimes maybe 1. So the volatility of his profit taking is about 70%. It's a little bit all over the place. But of course, when we talk about profit taking, right, sometimes a high ISD is actually good, because maybe some days you take this amount of profit, but some day you take even higher, then that will result in a high RSD. But the thing is that in this case, right, because his average win is half the amount of his average loss, this RSD doesn't really come into play. This RSD only will come into play when your average win is very close to your average loss or even higher than your average loss, meaning your risk reward ratio will come to about 1:1. Then having a high RSD will mean that actually your profit taking skill is quite good. But in this case, right, the ISD doesn't come into play. And you can see that for most of his win, right, the stock doesn't move more than 10%, meaning like what Ash say, the thing run a bit, the price go up a bit, this guy run now. And that is a very, very huge problem to this trader, because this trader, right, see the number go up green a bit, then like zao already, like want to quickly run already. And it is because of that, right, it contribute to a very, very high winning rate, because the moment go up a bit he run, the moment it goes up a bit he run, then his win rate get very, very high, because he just running with as little profits he can get. Okay, so in terms of weakness, traders show lack of strategy or trade plan. Later, when we look at individual chart, right, we will see what. Let's talk in detail about what this means. Traders show lacks of planning for entry, exit, and profit level. Actually, exit he still have, okay, but in terms of entry and profit, it might be a little counterintuitive, mainly because if you are following Patreon, right, then of course what you should have a proper entry mark. But you will see there are some trades that is not part of Patreon, and even there were 1 or 2 trades that is from Patreon, but he kind of chased the price, meaning he didn't enter at the time that we should be entering. Traders show lack of confidence. So this lack of confidence is referring to he think he playing mahjong, keep winning chicken hand. Okay lah. So yes, to put it to put what Ash say in a more diplomatically correct phrase, right, is this trader lack confidence, because when you enter a trade but you have no confidence in your trade, right, the price move up by a bit and then it start to come down like maybe 1 or 2 tick, you like scared already, like this one going down all the way, I run. So it shows a lack of confidence. And later when we look at some of the trades, not some, we will be looking at all, you will start to see how this plays out. Trader, the strength is, of course, trader shows discipline, and this discipline is very, very important, because if you can build your confidence, right, if you can build your confidence in holding your trade, right, then you will have the discipline to keep doing that for all your future trades, and you will become a better trader. So the key thing is you need to have the confidence in your trade. So a recommendation, traders should definitely hold on to winning trade. And of course, if you do not have confidence, right? This is like just words only lah. Like I just like you go and tell the like a homeless person come and tell you say, hey, please donate money. I'm homeless leh. Then you tell the homeless guy, oh, you homeless lah. Then go and buy a house lah. So it's like it's not solving the problem. It's not solving the problem. The problem here is why is this trader not holding on to his profit? There must be a reason why he's not holding on to his profit. Just by simply saying, hey, you should hold on to your profit, it's not going to solve anything. It's like telling an angry person to calm down is just going to make the person worse lah. So hence there is this second recommendation. This trader, right, should do some forward testing with a paper account, meaning you go open a paper account with exactly 100K or so. After you open this, right, you do some paper trade, and instead of running like you always do, right, just hold on to those trades. Just hold on to them. Don't touch them. Don't look at the market. When it comes down, from green become red, let it be. You just put your alert at your stop loss, put your alert at your TP, and then don't look at the market really. Just go and do something else. And only when your alert lights up in your handphone or your PC, right, then you go and see whether is it profit or is it stop loss, then you take the appropriate action. But for this particular trader, I believe this might be slightly hard, because what I noticed is that for most of his trade, right, he probably do not have a TP level. He probably do not have a planned TP level. He just like take what he can get, and then after that he don't really care about how the future price are going to be lah. No, it's not about the market. It's not about the market. Because for me, I have no confidence in the market. But what I have confidence in is that I have confidence in my trade plan that regardless of the market, right, I put this trade, I put the TP stop loss there, and then I just go and do my own thing already. Why? Because my strategy has been backward tested and forward tested through like 4-5 years, meaning this strategy have gone through 4 years of market cycle. Within this 4 years, there's like, I don't know, the 2015 crash lah, then we have the COVID-19 crash lah. Even through this crash, right, my strategy is able to hit that TP level with 70% winning rate. So it is because of this backward and forward testing that I did, right? Right now, I have the confidence to hold. But if you are simply blindly following someone, or you just enter a trade because you feel that this one's strong, you feel that that one's strong, or that guru say okay, or Wall Street bet say this and that, right? No matter how pro the guru is, or how accurate the Wall Street bet analysis are, right, you will never be able to hold on to your trades, because you simply do not have confidence in yourself. Either you are following someone else blindly, or you never do any forward backward testing. And that's why forward and backward testing is important, even if you are following someone, because you are blindly following them, or maybe you know their strategy but you don't know the result, and because you don't know the result, right, you do not have the confidence. So hence, in order to get the confidence, you must do a little bit of forward backward testing. Go and make like 100 trades, take 1 year off, go and make 100 trades to see what is your result like. And if your result is fine, then you can like stick to your TP level. Yes, it's like a stress test. Okay, so I've gone through all this portion already. So profit profile, definitely D. So this one, we need to find ways to improve lah. So overall it's a C lah, because somewhere there lah, average lah. Average. If your expectancy is positive, right? We do have a proper grading criteria. I do have proper grading criteria. Actually, all my students will get a similar report card like this whenever they finish their 3-month course, when they give me enough trade data. So as long as your expectancy is more than 0, right, meaning you are profitable, more than 0, you will get a C. If you are below 0, like going into the negative zone, right, then you will get a D lah. But of course, because you are trading, when you are trading, you are spending so much effort, you are spending so much time, right? This level of expectancy is not worth it. Imagine you make 10 trades, you make the 10 trades from April all the way until September, but with a 100K account, but at the end of September, you only get $400 profit, then like is the effort worth it or not? Is the effort of going through so much, is the effort of going through all the charts lah, like staying up at the night to go and enter your US counter lah, what lah, is it worth it or not? So definitely not worth it lah, which is why we have to improve. Okay, let's look at some of the trades. So these are the 10 trades. On these trades, right, you will see 3 lines. Entry line is the price that he entered. So of course, I have no idea which day lah. I checked some of the dates, they are not really accurate also, either typo or I'm not sure, but I'm going to assume that the price are accurate. So you will see the entry line. If it has a green line at the top, right, meaning this trader TP there, make a profit there. And the red line you see at the bottom is his planned stop loss. He has a planned stop loss here. Okay, that is his planned stop loss. Shit, where's the trade? And let's say if he doesn't have a green line, it is just sorry, if it is just a green line and a stop loss, right, meaning he entered here and he got stop out here lah. He didn't get any profit lah. So if there's only 2 lines, meaning he hit the stop loss lah. He was exited from the trade. Okay, so now let's look at all the trade one by one. Number 1, where is the Taskas? So Task US, definitely a Patreon trade, but there's a very big difference. He chased at the high. Our Patreon trade was somewhere here. Okay, let's bring up the Patreon trade. Should be somewhere around here. Task US. Where is it? Never mind. So this was the Patreon trade, and eventually we hit the TP, and then it went up even higher. But the key thing that you have to notice here, regardless whether the price go up higher or not, is the distance between my stop loss and the TP compared to how much he TP and what is his actual stop loss is. So you can see that there is a very, very big difference. And we will come back to this counter later, because this counter is a very, very good, I would say, a case study for Mr. Neil Thompson. Okay, so the original trade setup, the entry was here, the stop loss was like a bit lower than him. Or obviously his stop loss he put higher because he entered late lah. And of course, since he exit with a profit, right? Most of you might think that, hey, exit with profit, why you say him like go make money what? Yeah, but okay, yes, you make money, but as I said, trading is not like you make money one time and then it's like lottery like that. No, it's actually we are going to be making hundreds, if not thousands of trade, and your trade performance cannot be looked at just a standalone trade in a vacuum by itself. Your entire system need to be looked at as a whole, which is why if you look at very recently, I also added the risk of consecutive loss, right? It is considered in 500 trades and 1,000 trades. So we need to be looking at a larger number. So this is Taskas. Let's look at his other trade. Selective incorporation. So for those who are not aware, selective incorporation is also a Patreon trade. In fact, this Patreon trade is still ongoing, haven't hit the TP yet. So this was the first sign that I kind of realized this guy cannot hold his profit. So where's my selective incorporation? Here. So he followed my stop loss, 131. He followed my stop loss. But my profit is like not even halfway. It's still like very long way. If I would, I mean, sadly, I'm personally not in this trade lah. But of course, all my trades, the TP and stop loss are around this level one. If you have been trading with me long enough, right? It's usually around this level. So normally for me, right, this counter is like under my pillow, still sleeping. I'm not even going to be aware of this counter like during this moment lah, because it's like still so far away from TP. But you can see that perhaps when price went up here and it start to come back down, right? This trader cannot already, then run first lah. Then next, let's look at Union Gas. So Union Gas, this one is also a Patreon trade. This is also a Patreon trade. The entry, right? The entry, I believe, should be here lah. Should be here. And he wait, let me double check. Union Gas 0.89 and 9.8. 0.89 and 9.8. Yes. So it's somewhere like this. So Union Gas is also one of the counters. It is on the Patreon. So let me just quickly check Union Gas. But for Union Gas, right, we do have Patreon trade set up, but the Patreon trade setup are not at this level. So actually he took this trade by himself because none of the TP or the entry level, it is according to Patreon lah. So let's quickly go and control find, right? That's why this Excel spreadsheet very useful. I find it very useful. Is like it's hard evidence lah. It's super hard evidence. Like someone cannot come and deny, say, hey, you never enter. Well, I show you where I enter. I will show you. So okay, well, this entry was somewhere April. So I believe this is the closest entry. This is the closest Union Gas entry that I have. He entered somewhere this candle here, 1st of June. What is the next Union Gas entry? The next Union Gas entry was like way back in March already. Then of course the other Union Gas entry unfortunately was a stop loss lah. So we actually had 3 Union Gas entry. The one that he took was somewhere slightly after our second entry lah. Our first entry was maybe like somewhere here like that. I'm not sure. Okay, so in this case also, right, you can see that his stop loss is about 22% now, 20% now. But when he take his profit, right, it's only 10%. After 10%, he run like, in fact, he ran here, and if he had hold one more day, right, if he had hold one more day, it is like an additional 12%. Of course, I mean, now that we are looking back in hindsight, right, I can kind of feel the pain lah, like okay, TP ready, then next day the whole thing just ran up lah. Okay, next let's look at Yoma. Okay, Yoma, actually the losing trade, nothing much to say because he set his stop loss and then he exited his stop loss, which is a very good thing lah. So this one nothing to say. Oxipay Financial is actually this one, the MC payment. I think they changed the name or something lah. So also same thing, he entered here and then gonna stop out here. Of course, Fire Rock also entered somewhere here and then stop out here. Now Cassava Science, this one also I'm not sure which one. I think it was, the entry was probably here, this one. The entry is probably this one. Let's double check. Where is it? Cassava, 11 August. So yes, so the entry is somewhere here, and then like 2 days later, then 照了. But the stop loss is like all the way down at 84.6. And I believe among all his trade, what I will consider close to kind of like showing a form of system, I would say, is APAC Realty lah. But even then, this APAC Realty is a Patreon trade, is a Patreon entry. Let's look at which trade is it? This one should be this one. Yes, it is at 0.725. It is on 5th of July. So it's on 5th of July. This one, this candle here, this particular candle here, 0.730. So he entered at 0.730. Stop loss is at 0.600. So he was slightly above my stop loss, but doesn't matter. He get the stop loss anyway. But his profit was at 8.2. His profit was at 8.2. So what I believe is that for all his trade, right? For all his trade, he didn't preset a TP level. He just entered, put a stop loss, and then after that he see the market go how, then after that he just stays. So he didn't plan out a TP level first. He just see as and when the market is, then he just TP. But for our APAC Realty, right, this TP was already planned at the moment of the entry, is at 90 cents. So actually, I mean, we managed to get the profit lah. In fact, it is not the only trade that we do this. It is in fact for all our trade that we do this. We follow exactly that. Even for Snowflake, if you look at Snowflake, right? If you look at Snowflake, I call for profit actually on like 15 September. But before 15 September, right, during this 10 September, it was like less than 1% away from the TP level, but I did not call for TP. I only call for TP when it like really touched that TP line, and then I call for TP. So if we look back at this, right, then you can kind of ask, hey, then why am I so confident that it will eventually go and reach there? Why am I so confident that it will not go 324 and then come back down already and it will never touch 3? So the reason why I'm confident is that I have done the backward testing. I've done the backward testing, then I've done the forward testing, and 70% of the time it will hit my TP whenever I place it at about close to 1:1 risk reward ratio lah. So I will always get the TP if I place it at the TP level there. So that's what I mean by confidence. So now let's look at the interesting one, the one of the interesting trade. So the interesting trade I'm looking at, I'm talking about Ferroglobe, because Ferroglobe is the only trade that he get a profit percentage that is close to his loss, which is 2% profit, whereas all his other profit trade is like less than 1%, except for Ferroglobe. And Ferroglobe is also the only trade in his profit trade, right, that the price move up 20%, very close to 20%. In all his other trades, profit trades, the price moves 6%, 8%. So let's look at how he managed to get this. And if you look at Ferroglobe chart, right, it's very obvious. It's very obvious in the sense that the price immediately move up. The price immediately move up. It didn't go sideways for one day. If it goes sideways for one day, right, I believe he will have exited on like second candle already. It just immediately move up candle after candle. And in fact, when it move up candles after candle, right, it didn't like form any upper weight. It didn't form any upper weight. It just keep going up. If it have any upper weight, right, I will also believe that the moment the price come back down during the second half of the trading hour, he will have exited also. So it kind of show that this is the kind of trader that can only profit when price move up immediately, and any form of break in between, even if it is like half a day or one day, right, this trader will definitely not be able to hold on to this lah. And in fact, this trader chose to TP here. He didn't even like wait another day also, because if he had wait another day, right, he could have theoretically get this high. Even if he doesn't get that high, he wait until the next day close, right, he will still get a higher TP price compared to somewhere here. So I guess even when price is moving straight up, right, at some point he believes that, okay, enough is enough, then he's going to zao. So in fact, what I believe made him run is that he is able to get close to 20%, which is of course close to his risk level. So it is where his risk reward ratio is very close to 1. That's why he decided to zao. That's my speculation, and he doesn't want to risk anything beyond that because he is happy with that. So now my question is that if your best scenario, if your best scenario, you can only get a risk reward ratio of 1, right? Whereas every other trade you are going to get like 0.3, 0.2, 0.4, then overall your trade is not going to be doing very, very well also lah. Hence, we come back to another important factor is that when we look at all his trade, his stop loss is actually very, very wide. If you look at all his stop loss, it's actually very wide. And in fact, I can see that for some of his trade, especially those that he follow Patreon one, right? His stop loss follow exactly as the Patreon one. So for example, this APAC Realty, he follow exactly. So when you are following Patreon stop loss, right? And when you want to kind of like apply it to yourself, you need to understand the reason why the stop loss is set that wide. It's kind of like set this wide, and it's not like set maybe here. It's not like set maybe here. How come is it set all the way below that? Because when I personally set all these kind of stop loss, right? It is the main reason is I want the holding power. I want to have the holding power. Let's say if a counter goes up like this, and then if it goes up a bit, but after that come back down, stagnant, after that go back up, right? I will still be in the trade. That's why my stop loss is like set there. In case price come back down here to retest this support or this consolidation or whatever. That's why I put my stop loss there. So if it goes up, green, then after that, from the green become red, then after that become green again, I will still have the trade. I will still be holding this counter. But if your TP strategy is going up, then the moment it come down, you run ready, right? Then what for you place your stop loss there? There's no reason for you to place your stop loss there already. In fact, you might as well place it here, because the moment it come back down, you are zao already, ma. So why place stop loss so far? In fact, by placing a stop loss here, right, you can buy so many lot sizing that you can get more profit when it is going up like that. But of course, I'm not recommending that. So the key thing is I'm not recommending this. That now my counter argument is that if you put your stop loss here, right? If you put your stop loss here, chances are that you are going to be that kind of trader where price go up immediately, then you can profit. When price come down a bit, right, you cannot profit anymore. And in fact, if you are following most of our Nimbus Capital trades, right, there are many trades that price always, not always lah, very high probability price tend to come back down, rest a bit and then go up. But of course, we do have trades that go up straight also, but majority of the time they kind of like rest a bit lah. But I mean, for us, we are okay with that kind of trade because our stop loss is set nicely in a way that if this happen, right, we don't get cut off lah. So APAC Realty is a very good, APAC Realty is a very good example because let's look at this trade. Why is the stop loss there? Why is the stop loss there? The stop loss is there because in case price come back down and retrace a bit, so that we do not get cut off, so that when it eventually rebound, right, we can still get the TP. And also when price goes up, but when it come back down, right, we are not really going to worry too much also. We are going to hold on to the counter and let it sit for a while, let it go back up. But in this case, right, if price goes up like this, then you TP ready, right? Then this stop loss here, it does not make sense really. It no longer makes sense really. So let's come back to which one? The TAS US. the task you ask. Okay, so you set your stop loss, your entry was maybe somewhere here, and then you set your stop loss there. Then if you are doing that, right, the reason why you are setting your stop loss there is that in case price like come back down and consolidate a bit and then continue to go all the way up. So the reason why the stop loss is there because you want this kind of price movement. So you can actually set your TP there so that when it do this zigzag movement, right, you are still in the trade to get the profit at the higher level. But the thing is, if you set your stop loss there, you enter here and then you exit here, right? Then why? Then this one become like, huh? Like what? So the key thing is you need to figure out yourself. You need to figure out yourself. Your trading style tell me that you are a scalper. You are a scalper when it comes to profit. You want a bit of profit, then you run already. So if you want to be that kind of trader, right, then your stop loss need to reflect that. Then you need to go back to step one. You need to go and do back testing to how narrow can you shift your stop loss to, because from the way you take profit, your this very wide stop loss doesn't make any sense. So you need to go and backward test to see how narrow can you go to your stop loss so that you can still get a profitable result. You can still get a profitable profile. And after that, after you backward test ready, right, you need to forward test also. Can your strategy works in a forward testing? And then after you figure out, right, then maybe you will come to an understanding that, okay, then if I enter here, I put my stop loss here already, because the moment it come down, then I don't want to be in the trade. I just want those trade that goes directly up. So maybe you want to be that kind of trader, and that is a perfectly viable strategy, provided that you figure out all these numbers and all these ratio, all these statistics by doing forward testing and backward testing. But in Nimbus Capital, we don't do this. We are more of, I will say, we cater towards full-time folks with full-time job. We don't want people to stress out every day, go and see where the market is, can exit or not. No, we just want trader to just see the chart, put the stop loss, put the profit, and then go and do their work. Then the moment when it hit TP like 1-2 months later, then they can take the profit lah. Of course, you can say that then if like that, right? If like that, I'm not earning so much profit, well, I would rather go in and out, in and out. But the thing is, if you are going in and out like this with no proper plan, right, you will still see that your expectancy is very far from if you are just someone who is doing what we tell you, doing what Nimbus Capital tell you. You will in fact have a much easier time and a much profitable account. So that is why I emphasize that if you want to follow Patreon trade setup, you must follow exactly in the sense that that TP level is there for a reason, because through back testing and forward testing, we are confident that 70% of the time it can reach there. But if you are following Patreon trades, but you don't have the confidence to hold until the TP level there, right? Then it is something that you need to kind of like work yourself on. And one way that I can advise you is to go and paper trade. Go and do some forward testing with paper trade. Just take the trade, then leave it there. And after 1 year later, you see for yourself how many percent of your trade can actually hit the profit, and you realize that it is actually about 70% like that, which is why I go through all the trouble to pull up this number, because it gives my follower confidence. They are not doing things blindly. So it tells them that actually when they hold, right, they can get it 70% of the time. So now to summarize things, right, if you still want to follow Patreon, then you either number one, just blindly trust the number, that blind faith that I say can hit, but of course you can hit 70% of the time. That's why that number is there. That's why we have all these data here. But if despite all this data, you cannot control your feeling, right, then you go and paper test. Do a forward test with a paper account. One good thing you have going for you is that you have a 100K account and you are only taking 2% risk. Meaning, even in the worst case scenario, right, there is no way on earth you are going to blow your account. So you can just relax, put the TP alert there, and just go and, like, I don't know, go and like do your hobby, spend time with your kids, or go and, I don't know lah, I don't know, I don't know what you do in your free time lah, but that's what I can advise lah. But if you feel that you want to stick to your profit strategy where you just want trades that are going directly out, right? Then my advice is your stop loss level cannot be so wide already. Your stop loss level need to be much narrower to account for your aggressive profit taking. And I cannot advise you how narrow can your stop loss be, because this is something that you need to do backward testing and forward testing for yourself. So that's the hard labor lah. That's the hard labor. There's no escaping that. If you choose not to do it, right, then you will kind of like be forever in this situation that you are in lah. Your trades are not getting anywhere. So these are the advice that I can give you. And I'm going to upload this video. Of course, it will be in Patreon, and along with the video, right, I will upload this report also lah, so that you all can go and take a look, and you all can go and see, right? So I do hope that this session kind of encourage people not to blindly trade, but go and look at your trade data. In fact, I encourage as many of you as possible to upload your data. And the worse data you upload, right, the more I can help you. If you upload like 10 profit trades, right, then I can't do anything with that. I can't do it. So the reason why I pick out this profile is because there are a lot of things to talk about. There's a lot of things that we can learn from. There's a lot of things that this person can improve. So that's why this profile was picked out. And if you give me like 10 profit trades that are like everything 100%, then I mean, then what? Then you are the best trader already. You don't need to come to me already, right? So I do encourage that. And actually, we come to the end of the session. Actually, Jack, yes, what Jack says is correct. If you feel that 2% side, 2% position, 2% risk per position is a little bit too high for you, right? You can go for 1%, but from the way I'm looking at how this person trade, right? This person is very comfortable with his risk. He's okay, lose 2%, fine, I'm okay, I can take it. That's why his risk is like on the spot one. You see, 2% he zao already. He don't care about the loss. He don't care about the loss. He's okay with the loss. But what he is not okay, what he is having trouble is having keep the profit. That's why his issue lah. So even if you ask him to go to 1% risk, right, he's gonna keep to his consistency. He will exit all his trade at 1% loss. So he will still he will still have his profit issue lah. And I want to point out one thing. 2% risk doesn't mean very wide stop loss. 1% risk doesn't mean very narrow stop loss. I can have a very, very wide stop loss and still have a 1% risk by trading very, very small shares. So your stop loss, narrow or tight, is not defined by your 1% or 2% risk. Those are totally independent. If you can always go very, very narrow and you can still have 2% risk, meaning it is your lot sizing will be very, very high. But if you have a similar narrow stop loss but with 1% risk, then you have half the lot sizing lah. So it is your lot sizing that is going to affect whether 1% or 2%. Where your stop loss is determined by your strategy. So these two are very, very different concepts. In fact, I have one session in my 3-month course, right? There's one session dedicated to untangling these two, because a lot of traders have very, very misconception about what risk and what stop loss is. Stop loss is not your risk management. That's one hint I can give you. Stop loss is not your risk management. Okay, so make sure you get that. I can enter here. I can put my stop loss here, and I can still set 2% risk. but my lot sizing will be so low that maybe I can only trade like 100 shares. Okay. Okay, so we come to end of the lesson, and hopefully it has been an enlightening session lah. I know the first session was a little bit too raw. I didn't prepare anything. I just I just come in and sit down and do all the calculation. But now I kind of prepare something lah. So at least it's a little bit more smooth lah. Okay, so go and I don't know, go and tell your friends, like if you do not have $3,000 to come to my course, right? You can keep submitting your trade data every week and hope that I keep giving you free advice over the course of like 5-6 months lah. I don't know lah. I don't know. Okay. Okay. So have a good night and have a good weekend, everyone. Thanks for coming.